If you're just stepping into the world of trading, chances are you have heard people mention prop firms more than a few times. Maybe it came up in a YouTube video, maybe someone dropped the term in a Discord chat or while hyping up a success story on social media. Either way, it probably left you wondering what exactly is a prop firm? More importantly, is it something you should get involved with? Here's the truth. Prop firms are changing the game for every traders. They are not new, but in 2025, they have become more popular, more accessible, and if we are being honest, more complicated than ever. These firms offer people like you the chance to trade with larger amounts of capital than you could probably access on your own account. So that means more potential profits, but it also means more responsibility. And if you don't understand how these firms work, you could end up in a situation that is harder to get out than you expected. So what exactly do they do? In simple terms, prop firms give traders access to company capital. You prove yourself through a challenge or evaluation, and if you pass, they let you trade using their money. Sounds fair, right? But that's just the surface. A lot has changed in the prop firm space since the big shakeups in 2023 and 2024, where some major firms came under regulatory fire. 2025 is now all about clarity, security, and smarter funding options. So you will find new firms rising fast and old names trying to adjust to stricter rules. Some are legit, some are still figuring it out, and unfortunately, a few are simply not what they seem. So what makes one prop firm better than another? The rules, customer support, or is it how easy they make it to get funded in the first place? So these are the kinds of questions you should be asking before you even think about signing up. Because while it's true that prop firms can offer life-changing opportunities, they can also drain your wallet if you're not careful. So that's where this video comes in. We're going to break everything down for you, what prop firms are, how they actually work, the reason traders flock to them, and the very real risks involved. We'll talk about how prop firms make their money, what red flags to watch out before, and how new rules in 2025 are shifting the landscape. You will get a close look at some of the biggest and most trusted names in the business. And if you're asking yourself, how do I pick the right one? Well, don't worry. We will walk you through what to look for depending on your trading style, experience level, and personal goals. Whether you're a scalper, a swing trader, or someone still learning how to place your first trade, there is something here for you. Curious about the firms offering instant funding? Want to know which ones are most beginner friendly? Or maybe you're wondering if any of this is even real? Can someone with just a laptop and Wi-Fi really make thousands trading someone else's money? Or is it all just clever marketing? These are the kinds of questions we will be answering. And by the time we are done, you won't just know what prop firms are, you will know how to spot the good ones, avoid the bad ones, and decide whether this path makes sense for you. Let's clear things up from the start. The term prop firm is short for proprietary trading firm. Sounds complex, but the idea is actually pretty simple. Proprietary trading or prop trading just means trading financial markets using a firm's own money instead of working on behalf of clients. So that's it. The goal is to make a profit for the company itself, not for a customer. Now, let's break it down even further. Imagine that you are a skilled trader. You have dedicated a lot of time to learning the charts, testing strategies, and figuring out how to manage risk. But there is one major problem standing in your way. You don't have a lot of capital to trade with. So you might only have a few $100s in your account. And as you probably know already, it is incredibly hard to grow a small trading account without taking huge risks. That is where a prop firm steps in. A prop firm looks for traders who show potential. They give them access to a larger account so they can trade with more money than they have on their own. In return, the firm keeps a percentage of any profit the trader makes. The trader also gets a cut, and if it all goes well, both sides walk away happy. It's a partnership, really. One side brings the skill, the other side brings the capital. So how do you get access to this capital? That is where the evaluation process comes in. Most prop firms don't just hand over money to anyone who asks. You usually have to prove you know what you're doing first. So this is done through a challenge or assessment phase. You're given a demo account and a set of trading rules that includes things like maximum daily loss, profit targets, or how many trading days you need to complete. If you pass, you get funded. If you fail, you try again. This is the core idea behind modern retail prop firms, but this concept didn't start with online platforms or flashy marketing videos. Prop trading has been around for decades, and it didn't always look like this. Back in the day, proprietary trading was something that happened behind the scenes in investment banks and hedge funds. These institutions had entire departments full of professional traders who used the company's own funds to try and generate profits. In the industry, named the profit makers. They had access to private research, massive amount of capital, and often sat close to the source of big market moving information. Prop trading in banks and hedge funds is still very much alive today, but it works a bit differently. These traders are usually employees. They receive a base salary and performance bonuses, which is based on how much money they make for the firm. Their job is to keep the profits rolling in, but they also have to follow strict internal rules and often deal with more pressure from regulators. Things changed after the 2008 financial crisis. As the markets crashed, regulators around the world started clamping down on risky behavior. One big target was proprietary trading inside banks. Some of the rules that followed made it harder for banks to use their own money for aggressive trading. That is part of why retail prop firms started popping up online. The model shifted from in-house institutional trading desks to public-facing platforms that anyone could apply to. Now, in 2025, the landscape is wide open. Anyone with a laptop, an internet connection, and some trading knowledge can attempt to become a funded trader. Retail prop firms are different from traditional institutions in several key ways. First, they are not investment banks. They don't manage customer portfolios or give financial advice. Their business model is all based on the challenge fees themselves, not the profit split. So it's way different than the banks that were using proprietary trading. The retail prop firms are remote as well. There is no need to step into an office or shake hands with an hiring manager. Everything is done online. You sign up for a challenge, follow the rules, and if you hit the targets, you move on to the funded stage. So what exactly are people trading with these firms? That depends on the firm itself, but most prop traders focus on highly liquid markets. This usually includes forex, futures, and contracts for difference, better known as CFDs. Some firms also allow trading in commodities like gold and oil, global indices such as the S&P 500 or Nasdaq, and even cryptocurrencies like Bitcoin and Ethereum. A few more advanced platforms are now offering stock trading and options as well, but those are usually reserved for traders who already have some experience. One reason these instruments are so common is that they move fast. With high volatility and tight spreads, there's always an opportunity to make a move. But these speed also come with risks, which is why prop firms place heavy emphasis on rules like maximum drawdown, stop loss protection, and consistency requirements on some platforms. To sum it all up, prop firms are the middle ground between independent trading and professional Wall Street trading desks. They give retail traders a chance to level up, but with rules in place to protect both sides. Unlike brokers who simply provide a platform, retail prop firms operate on a very different model in a sense. They earn almost entirely from challenge fees. Profit splits are typically a net cost to them. When traders win, the firm loses. When traders lose, the firm wins. So you could compare it to a B-book broker in a sense, where you make profits on the broker, it's a loss for the broker, and vice versa. But that doesn't mean every prop firm is the same. Some are well structured and trader focused. Others are designed more like subscription businesses with tricky rules. And in 2025, with more firms entering the market every month, knowing how to tell the difference is more important than ever. Next, we will dig into why someone might choose to go this route in the first place. After all, if you can already trade on your own, what is the point of using someone else's money? Let's talk about that next. Trading in 2025 looks very different from what it was just a few years ago. Technology has advanced, tools have become smarter, and opportunities have widened for those who know where to look. One of the biggest shifts in this space is the growing popularity of proprietary trading firms. For many traders, these firms offer a better route than going solo with a small broker account. But why are more traders choosing prop firms today? Let's start with the most obvious reason, which is access to capital. Most independent traders are limited by the size of their own accounts. If you're trading with your savings or a side income, you might only have a few hundred or a few $1,000s to risk. That kind of capital doesn't give you much room to grow, especially if you're trying to follow strict risk management rules. With a prop firm, you're trading a much larger account from the start. In some cases, traders can start with $10,000, $50,000, or even $200,000 in buying power. This gives you a real chance to scale your profits without putting your own money on the line. Next comes scaling. This is where things get exciting. In 2025, many top firms offer automatic scaling plans for profitable traders. That means if you hit your targets and follow the rules, your account size increases over time. For example, some firms will double your capital after a few months of consistent performance. Others add monthly increases based on profit milestones. This helps traders grow faster than they ever could with their own limited funds. But scaling is just one part. Another major advantage of prop firms is how they handle risk. When you're trading your own money, every loss comes straight out of your pocket. One bad trade can wipe out weeks of progress. Prop firms flip that pressure around. Yes, you have to follow strict risk rules, but if you hit a drawdown or get stopped out, you're not losing your own money. That takes a huge weight out of your shoulders. It allows you to focus more on executing your strategy rather than stressing over every dollar that's at stake. Some prop firms also provide mentorship and training programs. This has become even more common in 2025. With more competition in the prop space, firms are adding value by helping traders grow their skills. You might get access to weekly webinars, one-on-one coaching, or video libraries that break down strategies and market behavior. Some platforms even assign senior traders to review your trades and give feedback. For new or developing traders, this kind of support is priceless. And then there is the community. Trading can be lonely if you're doing it all by yourself. Most retail traders work from home, stuck behind a screen for hours without anyone to bounce ideas off. Prop firms solve that by building communities. Many offer online forums, group chats, and trading rooms. Here, members share ideas, discuss trades, and support one another. Some firms even organize live meetups and virtual summits. Being around others who are just as serious about trading can make a big difference in how you learn and perform. Now, let's talk about the tech. In 2025, the best prop firms are investing in serious technology. They're not just giving you access to a MetaTrader or a trading view chart. We are talking about AI-powered dashboards that analyze your performance, track your win rate, and break down your behavior by the hour, pair, or strategy. Some platforms give you a full trader report card every week. Others use machine learning tools to suggest changes to your risk settings based on your trade history. There are even firms now offering AI assistants that watch your trades in real time and alert you when you start drifting from your strategy. Instant funding is another major development this year. In the past, traders had to pass long evaluation phases before they could touch a funded account. Now, some firms are offering instant funding to those who meet basic entry criteria. It's not for everyone, but for advanced traders with strong track records, it removes the delay and gets you trading live capital right now. Others have shortened their challenge steps. Instead of a two-step challenge, many prop firms now offer one-step models. All these features show how quickly this space is evolving. Prop firms are no longer just offering capital, they are building full ecosystems for traders to succeed. Compare this to trading on your own, and the difference becomes clear. With a solo brokerage account, you're responsible for everything. You bring the capital, take all the risk, make every decision, and learn from every mistake without support. Prop firms may give traders access to big accounts, but they are still businesses at the end of the day. They are not handing out capital for free. So how do they stay profitable? The answer lies in how they structure their revenue. In 2025, this structure is pretty simple and comes with a simple model. The reality is that for most retail-focused prop firms, if not everyone, the main source of income, if not the only one, is the evaluation fee itself, not the profit splits on the funded accounts. While many firms promote the idea of earning alongside the traders, in practice, paying out successful traders is an expense, not a revenue stream. When a trader wins, the firm pays. When a trader loses or fails a challenge, the firm keeps the fee. This means the financial risk is often titled in the firm's favor from the start. So now let's talk about where prop firms get paid before you even start trading. Most firms require new traders to go through a challenge, like mentioned, the evaluation fee. These challenges test whether you can trade responsibly and hit specific targets without breaking rules. To enter one, you usually pay a one-time fee. These fees are the lifeblood of most prop firm business models. They fund operations, marketing, and payouts to winning traders. For traders, this setup is not automatically bad. It just means you need to treat a prop firm challenge like any other investment in your trading journey. The key is understanding that your fee is not just a deposit, it is the firm's primary way of making money. Entering blindly or without a plan only increases the odds that your money becomes part of their revenue rather than your starting capital. Some firms also offer subscription-based access instead of a one-time fee. You pay monthly to keep your challenge alive. This model has become more common with instant funding programs. It lowers the barrier to entry, especially for beginners who want to try a live account without jumping through a long test. So the downside is that the monthly fees can add up quickly if you are not making progress. These evaluation and subscription payments are a major income streams for firms. The reality is not every trader passes. Many pay the fee, fail the challenge, and either give up or try again. This cycle helps cover operational cost and protects the firm's overall capital exposure. Affiliate marketing plays a role too. Prop firms often reward users who refer others. These referral systems give affiliates a percentage of the evaluation fees from every new trader they bring in. So you might have seen YouTube channels doing this model. On our side, we're not affiliated to any prop firms. That's something you should know. Finally, there are private equity pools. Some of the more advanced prop firms now run internal investment funds where when they find top performing traders, they place those traders in larger managed accounts and take a portion of the returns. So these funds are often backed by outside investors who trust the firm's ability to manage risk and scale talent. You should know that's very rare, and that's when we come out of the big book model in a sense. So the key takeaway is that retail prop firms earn almost entirely from challenge fees, while any profit splits are generally a cost to them. When traders lose, the firm wins. When traders win, the firm pays out. Once you understand that, the strict rules and tight risk limits makes a lot more sense. They are built to protect the firm's revenue, not just to test your own discipline. Now, stick around until the end to learn how to make prop firms work for you. Trading with a prop firm in 2025 may sound like a dream. You get access to large amounts of capital, slick platforms, and the promise of huge payouts, but there is a side to this world that many traders overlook. It is not all smooth sailing. In fact, for many, it can be a rough and expensive lesson. The first major hurdle comes at the start. Most retail prop firms will ask you to pass an evaluation challenge. That means you have to prove you can follow their rules while hitting specific profit targets. At first, this might seem easy enough, especially if you're confident in your strategy, But here's the catch. These challenges often come with strict daily drawdown limits and maximum loss rules. One bad trade or one impulsive move can lead to failure, even if you were profitable overall. This kind of pressure affects performance. Traders begin to focus less on solid setups and more on avoiding disqualification. And when you fail a challenge, you lose money. Evaluation fees can range from modest to several $100s, depending on the account size. Some firms offer resets for a fee, while others require you to pay for a new challenge. It adds up quickly. There is also no guarantee of success the second or third time around. It becomes a cycle for some traders. Even after passing the challenge and getting funded, you're not in the clear. If you violate any trading rules, such as going over the drawdown limit or holding trades past a restricted time, your funded account can be taken away. This could happen after weeks or even months of careful trading. And if that happens, most firms will not give back any of your fees. You're out. One thing you really need to keep in mind is that most prop firms are not closely watched by regulators. They don't follow the same rules as licensed brokers, so they pretty much operate on their own. If they ever hold back your money, lock your account, or suddenly go offline, there is very little legal support to back you up. The mental toll also cannot be ignored. Many traders find themselves glued to their screens. The pressure to perform with someone else's capital creates a different kind of stress. You're not just trading your money anymore, you're being watched in a sense. Every mistake feels bigger. Some traders burn out or quit after repeated failures. There are also more obvious risks to avoid. Red flags have become more common as the industry grows. Some firms make exaggerated claims about massive payouts or show fake testimonials. Others use misleading marketing to trick beginners into thinking they will get funded instantly without showing the fine print. Watch out for firms that avoid showing proof of real traders being paid. If they do not share transparent rules or have no proper customer support, that is a problem. Another sign of trouble is if a firm changes its role without notice or bans traders for unclear reasons. In 2025, new scams are popping up that are harder to spot. Some websites pretend to be legit prop firms but disappear after collecting evaluation fees. Other partners with shady influencers who push referral links for fake platforms. One recent trend is token-based access, where traders buy a digital token to join the firm. In theory, this sounds futuristic. In reality, many of these projects lack real funding or proper infrastructure. If the firm collapses, the token becomes worthless. The truth is, trading with a prop firm requires more than just skill. It takes awareness. You need to read the rules carefully, research the company, and understand what you're getting into. The benefits are real, but so are the risks. Before signing up with any firm, ask yourself, can I afford to lose the evaluation fee? Am I ready for the mental pressure? Does this firm have a good reputation? If the answers are unclear, it's smarter to pause and look a little closer. In the world of prop trading, what you do not know can cost you. So take your time, pay attention, and always keep your guard up. Over the past year, regulators have started to pay closer attention to prop firms. What once flew under the radar is now facing a much tighter spotlight. The explosion in popularity mixed with a few high-profile cases has forced authorities to take action. Traders can no longer ignore this shift. If you're joining a prop firm in 2025, you need to understand what you're walking into. One of the biggest turning points was the CFTC's investigation into MyForex funds. This case made headlines across the trading world. It raised major concerns about how prop firms operate, especially when it comes to transparency, order routing, and whether traders were really getting the fair access they were promised. According to official filings, the CFTC accused MyForex funds of allegedly manipulating trading data and taking steps that blocked or reduced trader withdrawals. These allegations went far beyond technical issues. They touched directly on trust. The firm shut down soon after, leaving many traders confused and frustrated. Back in 2023, that investigation opened the floodgates. Since then, the CFTC and other regulators have started watching prop firms more closely. In Canada, authorities have issued warnings about platforms offering unregistered financial services. In the UK, the Financial Conduct Authority, FCA, has begun investigating firms that offer funding without proper licensing or clear terms. Even regulators in the European Union are working on new standards for firms that serve retail traders. All of this pressure is forcing prop firms to change how they do business. One major shift is the move toward contractor models. Instead of treating traders as retail clients, firms now label them as independent contractors. This helps firms avoid legal trouble, but it also means the trader takes on more responsibility. You're not protected like you would be with a licensed broker. Everything depends on the contract you sign. Another change is the rise of private equity funding pools. Instead of offering fake or demo-funded accounts, some firms are now building actual investment pools with backing from investors. Traders who pass evaluations are given access to real capital, but under strict agreements that outline risk limits. This model is more transparent, but it comes with tighter rules and closer monitoring. There is also a shift in how payouts are handled. More firms are linking directly with licensed brokerage or payment partners to stay on the right side of financial laws. Others are cutting off services to high-risk countries or pausing services altogether. If you're trading with or planning to join a prop firm in 2025, you need to be cautious. Carefully read every contract before you sign it. Ask questions about where your trades are routed and how payouts are processed. If the firm refuses to be clear, that is a major red flag. Pay attention to the location of the firm too. Some platforms claim to be offshore to avoid regulation, but that could put you at risk if they shut down without warning. Others will claim to be registered in the US or UK, even when they are not. Always verify their license number if they claim to be regulated. Also, look out for new terms being added to agreements. Some firms now include clauses that allow them to delay payouts, remove traders without warning, or change rules after you get funded. These kinds of terms leave you with little protection. Once you accept them, there is no going back. The world of prop trading is still growing, but it is no longer the free-for-all it once was. Regulation is here, and more is coming. This can be good for traders in the long run, but only if you stay informed. When it comes to prop firm, there is no one-size-fits-all approach. Each firm runs things a little differently, and the way traders get funded depends on the model they choose. Knowing the types of prop firms and how they operate is one of the first steps to picking up the right one. Let's start with the basics. Some firms offer what is called instant funding. As mentioned before, it means a trader can start using a funded account almost right away. There is no challenge or long test period. Once you pay the fee, they give you an account to trade with. This might sound like the easiest path, and for some it is, but this is usually a catch. These instant accounts often come with tight rules and strict limits. One wrong move and your account can be taken away. On the other hand, many firms still prefer evaluation-based models. These require traders to prove they can trade responsibly before getting access to real capital. Some firms use a one-step evaluation where you only need to pass a single phase with a certain profit target. Others use a two-step process, which is more common, which means you must complete two separate stages before getting funded, usually 10% on phase 1 and 5% on phase 2, or 8% on phase 1 and 5 or 4% on phase 2. The idea is here to filter out risky traders and reward those who can stay consistent under pressure. Then comes the question of how traders pay to join. Some prop firms work with a one-time fee. You pay once to enter the challenge or to access the platform and you're done. Others use a subscription model where you pay every month to stay active. Subscription-based firms often offer more flexibility, but as time goes on, the cost can add up. It really depends on your trading style and how long you plan to stay with that firm. Another thing to understand is the type of drawdown model used. This affects how much risk you can take and how far your account can fall before it's deactivated. A static drawdown means the maximum loss limit stays the same from start to finish. Let's say your drawdown is $5,000. That number doesn't change. A trailing drawdown, however, moves with your highest balance. So if you grow your account, the allowed loss gets tighter. This can be tricky because even a good trade could lock in a new high and make the drawdown limits harder to manage. Now, let's talk about the types of traders who do well with each model. Scalpers who make many trades in short time frames usually look for firms with no minimum trade days. They also need fast platforms and low spreads, so instant funding might work better if the rules allow quick trades. Swing traders who hold positions for days or even weeks need longer deadlines and room to breathe. For them, one-step or two-step evaluations are fine as long as the firm does not rush the process. Nowadays, there's no time limits, so it's the perfect model for them. Algorithmic traders who use automated systems often go for firms that allow expert advisors or custom scripts. They also need platforms that can handle large amounts of data and fast execution, which is most of the time MetaTrader 5 or MetaTrader 4 for the EAs. Not all firms are open to all styles, so it is important to check the rules before signing up. Some limit the number of trades, the number of lots you take, or even the time of day you can enter a trade. A mismatch between your strategy and the firm's rules can cause problems later on. Each model has its pros and cons. There is no perfect choice. What matters more is knowing how you trade and finding a firm that fits that rhythm. Some traders care more about flexibility while others want structure. Some want to scale fast. Others prefer to go slow and steady. In the end, prop firms are not only about the capital they provide, they are built around structure, discipline, and the way they shape a trader's development. In the fast-growing prop firm world of 2025, there are many ways to get started trading real capital. Each firm has its own history and style. For many traders, picking the right firm depends on knowing what each one offers and how it aligns with their trading goals. If you want the full breakdown of every major prop firm range from the best to worst, check out our tier list video for the full prop firm breakdown. Just watch until the end of this video and then you check our videos. That's one of our most viewed videos, tier list video breaking down all prop firms. Make sure to finish this one first so you have the full context. However, here is a full review of some top prop firms with honest details to help you make sense of who might fit your needs best. First up is TopStep. Founded in 2012, this firm has always kept its focus on futures trading. Over the years, it built a reputation for reliability, steady payouts, and a structured pathway into funded accounts. Traders start with a well-known trader combined evaluation. Past that, and you're funded. With room to scale through different tiers, Their platform includes live coaching sessions, group training, and a quick responding chat team. Real-time risk dashboard and performance analytics give future traders a clear view on how they're doing. The biggest limitation, you are restricted to futures only. Forex and crypto are not available. The monthly evaluation fee can also drag on if it takes you a while to qualify. Some new users find the rules a little dense, but the support staff are good at breaking things down. That said, there's been a recent shift. As you might have seen in my previous Top Step video in July 2025, Top Step was almost downgraded to B tier for us. This was a change due to Tradeovate and NinjaTrader lockdown, with only Top Step X now available on the platform. For traders who value both platform flexibility and public reputation, you might want to choose the other prop firm we spoke about, MyFunded Futures, which is coming one of the top prop firms in the industry nowadays. Now, next on the list is Funded Next. It has grown fast in recent years by targeting traders who want variety. They offer account sizes from small Forex to large equity funded setups. Traders can choose between one-step and two-step evaluations depending on their level. Profit splits start around 80% and can increase if you trade consistently. Their dashboard is clean and easy to use. Funding is often available within a few business days after passing each challenge. They support multiple markets, including Forex, indices, crypto, and US stocks. Some users have reported slower payout times when demand is high, but they have now a rule to pay you in 24 hours, and if not, they give you $1,000. So that's quite interesting. Occasionally, rule enforcement feels inconsistent between the account types. We've seen some traders being asked VPS bills to prove they are the owner of the accounts, or if you're traveling using different IPs, you need to make sure to keep the ticket of your travel to prove that to the company. This firm works well for swing traders and algorithmic traders who want flexible options as well. A major piece of advice is to read the fine print for each account type, as rules differ significantly between each of them. E8 Markets is another prop firm that is very popular among new traders because of its simple design, fast entry, and it allows US traders. They offer both instant funding and evaluation-based path, and they now started futures trading. Lux Trading firm is based in Europe and regulated by local financial authorities. They offer a one-step evaluation or two-step challenge depending on your plan. If you pass the evaluation, you can trade Forex, crypto, or global indices. Profit share starts at 75% and rises with good results. Being regulated means you get actual legal protection and a formal grievance process if issues arise. They focus on education and long-term growth. One drawback is slower scaling and stricter rule enforcement. Rules are rigid and might feel restrictive to traders used to looser conditions. It is best suited for traders who prefer structure, regulation, and long-term partnership with that company. Finally, FTMO continues to set the standard for many traders. It is widely known as one of the most trusted prop trading firms in the world. Since they started more than a decade ago, they've kept a clean record. No payout delays, no shady fees, no complaints about missing money. If you earn it, you get it. Simple as that. FTMO is not just about reputation. Their business is thriving. In 2023, they reported an EBITDA, so earning before interest, tax, depreciation, and amortization of roughly 100 million euros, a figure that speaks to the scale and efficiency of their operations. Their platform is built with serious traders in mind. The company gives you a free trial so you can test things out before putting money on the line. If you decide to go for it, there's a two-step evaluation that checks your skill and discipline. Once funded, you can scale your account up to $2 million with sustained performance. So that would be their scaling plan, where you start maxing yourself at 400K and can scale up to 2 million on the paper. What sets FTMO apart is how much they give back. You can keep up 90% of the profit split if you're consistent on the long term. That's one of the best profit splits available in the industry. You also get access to advanced trading apps that track your progress and give real-time feedback. These tools are key if you want to grow as a trader. FTMO doesn't stop at giving you money. They actually help you improve. They offer performance coaches and even psychologists who guide you through the mental side of trading. Their support team is always around to the clock, and they respond fast. Now, each of these firms has its own strengths and trade-offs. Some give instant access, others provide robust education and coaching. Some focus on big account sizes, others on simplicity and ease of entry. Your best match depends on your trading style, how fast you want to scale, and whether you prefer structure or flexibility, even though we'll always recommend the standard in the industry, the top one, which is FTMO. In 2025, choosing your prop firm is no longer just about profit share or size of account. It's about whether your model fits your personality and strategy. That means reading rulebooks carefully, checking reviews, and testing small before scaling. No firm is perfect, but a good match can help you grow without unnecessary stress or unexpected surprises. Take your time, research each company, ask questions, look for real payout proofs and clear policies. At the end of the day, prop trading can be rewarding if you align with the right firm. Choose wisely and keep your goals in clear view. And as I always say, if you don't want any trouble or if you don't want to ask you too much questions, just go with the top one in the industry, which is FTMO. We'll see right now how to choose the right prop firm for you. Choosing the right prop firm is more than picking the flashiest name or the highest profit split. It's about finding a firm that fits how you trade and what you need. Let's walk through what really matters. First, ask how you trade. Do you open dozens of quick trades in 1 hour, or do you prefer holding positions for days? Some firms expect fast trading and have limits on time or trade count. Others allow more breathing room. Make sure the firm's rules match your style. Otherwise, you'll bump into roadblocks before you even start. Next, look at the markets you want to trade. Not every firm offers every market. Some are built around Forex, others include cryptocurrencies, indices, or futures. If your ideal trade involves a stock index, don't pick a firm that only offers currencies. It can save you a lot of frustration later. Your budget is another big part of choosing well. Some firms charge a monthly subscription, others charge a one-time evaluation fee. If money is tight, a monthly fee might add up fast. Still, cheaper options are not always the best. Check what you get. Do they have fair rules, or do they let clients drop off the funded program unfairly? Choose balance over bargain. Payout frequency is often forgotten until traders wait weeks before seeing profit. Some firms pay weekly, some wait until a threshold is reached, sometimes monthly. Simply ask how often they send payouts. If you depend on your trading income, that makes a big difference. Regulation and transparency matter more than ever. Since major firms hit trouble in 2023 and 2024, traders are wiser. A firm should show real contact details, clear terms, and proof of payout history. If they hide behind vague promises or fake testimonials, walk away. Look also at support and mentorship. New traders gain a lot from feedback and training. Some firms offer live coaching sessions, community chat rooms, or trade review tools. Others give you an account and leave you on your own. If growing your skills matters, choose the ones with real support options. Here is a checklist to keep in mind. Does the firm allow your trading style? Are the markets you trade available? Can you afford their fee structure without stress? How often do they release profit payment? Are their terms clear and transparent? Do they give real support or a learning community? And finally, do not chase after the firm everyone is talking about on social media. Public praise can be misleading, but you need to know that your success comes from discipline and fit, not just name brand. So now that you have learned all the key parts of prop trading, the big question is this: is it right for you? Prop firms can open the doors to serious opportunities. You get access to large trading capital without having to risk your own savings. For a lot of people, this is the main draw. It lets you trade at much higher level than you could on your own. If you do well, you keep a cut of the profits, and some firms even reward top performance with better splits or long-term partnerships. It sounds like a dream, right? But let's be honest, that dream comes with pressure. Just because a firm gives you money to trade with doesn't mean they will let you do whatever you want. Every firm has rules. There are targets to hit and limits you must stay within. Break those limits and your account could be gone. Some people get frustrated, especially if they pass the evaluation but fail the funded phase. So while the promise is real, the risk is real too. This is why education matters. You cannot rely on luck. You need to understand risk, manage your trades, and follow a strategy. The most successful traders are the ones who treat this like a job. They practice, they review their mistakes, and they keep learning. If you go in without discipline or patience, it won't matter how much capital the firm gives you. It will all disappear fast. Also, not all prop firms are the same. Some are great, others not so much. That's why research is so important. Look up the rules, read reviews, ask around. Don't just jump into the first firm that offers a quick payout. The better your information, the better your decisions. Now, if you're just starting out, don't let all this scare you. Every expert was once a beginner. You won't be perfect on your first try, and that's fine. The point is to keep going. Learn from every mistake. Take each challenge as practice. If you stay consistent and keep working on your skills, success is possible. So, is a prop firm right for you? Only you can answer that. But if you're serious about investing, willing to learn and open to growth, then it might just be the thing that changes your life. Just be sure to approach it with clear eyes and realistic expectation. If you want to see exactly how traders are finding ways to profit from prop firms, check out this video. It has already helped many of our investors to find a way to profit from prop firms.